Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for January 22nd. It's Thursday, one day left in the week. Overnight, a penny and a half cent range in corn, up a penny and a quarter, trading 423 in March corn. New crop corn, that's what matters to everybody, what you're going to be harvesting next year. 450 and a half, up 3/4 of a cent. Spot beans, another 7-cent range overnight, 63 to 70. This area here, if you're following my letter, is a very key level. It's 25% retracement of the last $1.35 toilet blow flush we had. Um, we need to push higher. There's really no bullish news out there, which is interesting. China is done buying their 12 million metric tons. South America is beginning a harvest. There's no weather issue, but yet we are sitting here kind of bouncing. So take advantage of it. Remember, this is a futures market. It's not a right now market. New crop beans, 1078 and a half. People are starting to argue now, did we have our double bottom down there at 1055? That's the lowest price that we had going back to October. So we bounced off this 3-month low. Again, we've clawed back about 25% of the 75-cent drop we had. Remember when we traded 1131? Then we broke down here to 1055. So we've now crawled back 25% of that. Possibly we can bounce up and take out more. The next big known event is going to be the next USDA, which is the first week of February. The real big one is going to be March 31st planting intentions. We'll see, will farmers change their outlook on planting based on prices that are available right now? And again, so we'll stay on top of these numbers as they come for you. March wheat up 4 3/4 cent. March wheat, both Kansas City and Chicago, they're struggling with holding their contract lows. There's no two ways about it. We're very close to retesting or testing contract lows, which are also 5-year lows. I think as corn goes, so will wheat go. There's no real story out there. We have had excellent exports for corn and wheat, right? And the market doesn't care. So when you can get in love with fundamentals, which are supply and demand, you think, oh my goodness, everybody loves our wheat. The reason they're buying our wheat and corn is because prices are relatively cheap. Moving on to the livestock, we'll see. Is cattle about to roll over? We do have a cattle on feed tomorrow. We've had a $72 rally in feeders off the low. We've had a $34 rally in fats off the low. We've had a $15 rally in lean hogs out there in the deferred months. Great opportunity. What you don't want to be is a situation where we saw 2 months ago when we collapse and you don't have a hedge. So setting a hedge is not becoming bearish. Setting a hedge is not calling a top. Setting a hedge is capturing revenue. And my program is about capturing revenue for producers. Producers are always net long. There are other guys out there that will tell you they can call the highs and the lows. I've been doing this for 32 years. I spent 22 years trading the floor of the water trade. I've traded through multiple markets, different markets. And for the whole time I traded my own account. Right? So I ate what I killed. I started working with farmers and producers in 2010. So I feel like I've got a good sense of how to help farmers do what matters, which is make better cash sales. If you're interested in working with me, if you want to know my approach, how I look to manage risk, give me a call, 312-638-8868. Look forward to talking to you. I have not reinvented the wheel. What I bring to the table is 32 years of experience and all the knowledge that imparts. Okay, this is Chris Robinson, Robinson Ag Marketing. Have a great day.